Hey, welcome to forex.today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Damn, that's nasty coffee. Oh, hey, good morning. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. We're a broker. You're a trader. Let's get together, light the candles, set the table, turn on some soft music, and let's fall in love. What would you love about us? Reasonable prices and fees, depending on whether you want variable spread, fixed spread, ECN, fast execution, good customer service. But most importantly, I'm here every single day for you, helping you become a success. So, I don't know, out of loyalty, out of respect, or out of love, would you please open an account at TradersWay.com? I do these sessions 7:30 in the morning every single day, Monday through Friday here at forex.today, except for the first Friday of every month, in which I'm over at FX Street, hosting Trade Non-Farm Payrolls Live, which I've been doing for over 11 years. So I'm here, I'm there, I'm everywhere. Boom. Computer's still not working. You know what? I am so busy right now doing other stuff. I don't have the time. You know, I don't know. I gotta get them. It's a pain in the butt. Okay. Lucky thing is I have charts in front of me. Yeah, let's get this out of the way because you don't have charts in front of you. You know what? I forgot to adjust. Hang on. But yeah, so I'm just working on some off-market deals right now. Oh, gee whiz. Setting some other things up. But yeah, it bugs me. I got to get these things set. Might as well do that. All right, let's see if this works. Windows, please don't mess this up. Okay, all right. See that? That's the cafeteria at Traders Way. Come visit us in Dominica. All right. All right, here we go. Hot to go, HOTTOGO. This is nasty coffee. All right, so where are we at? Where are we at? Let's start with oil because it's Wednesday. So come up with a plan. Okay? It is Wednesday, isn't it? Wednesday, May 25th? I think it's a Wednesday. Yeah, Wednesday, May 24th. All right, so yeah, so oil inventories are going to come out. There's going to be another drawdown. Okay? So in the meantime, or in between time, maybe a little bit down, and then the news comes out and it pops up. What are you going to do in here? Around 53. Or even 52. What are you going to do around 52? It doesn't look like it doesn't look like a good opportunity to sell. Hopefully you're riding this up. Remember, we talked about it going from 44 to 54. It's actually kind of amazing now that we're worried about 53, huh? Isn't that amazing? When we were at 54, we had it going down to 44, and then when we got to 44, we said probably go back to 54. It's a weird world, isn't it? Besides oil inventories later today at 10:30 New York time, what else do we have to worry about in regards to oil, crude? OPEC's, yeah. It starts today, doesn't it? Or it's tomorrow, but they're rolling in today. Yeah. Yeah, so they're all rolling into Vienna. So something's going to happen to prop up oil prices, right? Think about it. Are they all going to meet in Vienna and not announce something to prop up oil prices? Charles says, can we expect an out of the left field announcement? Well, why wouldn't we? In this case, you should expect the unexpected. So what is the reason for them to get together? Push up oil prices. So if they were smart, they would do something to push up oil prices. Now, it's hard when you got a whole bunch of people. So according to game theory, in a scenario like OPEC, if they all work together, cut production, oil prices will go up. However, every single one of them are incentivized to cheat, to say, yeah, we'll cut, and you'll 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 cut. So everyone will cut. But what if I lie? Like, yeah, we'll cut too. Yeah, it's all good. We'll cut. Yeah, you cut, everybody cut, we'll cut too, right? And then you keep pumping anyways. And now you're winning. You're winning big because oil prices go up and you're pumping as much oil as you possibly can. But according to game theory, through reverse induction, right, whether you cooperate or defect, everyone should defect because it's in their best interest. And yes, in the long run, everyone will lose. But that's one of the problems with having a large cartel scenario. What do you need for a cartel to work? Why did the cocaine cartel of Medellin, why did that work? Yeah. Yeah, because Pablo Escobar will kill you and your family and your neighbors and your cousins. Yeah. So, it's funny, who's the wild card here on an OPEC deal? Iran has finally agreed, to the deal, right? Yeah, but because the deal puts them at 100% capacity anyways. They got the Rockies on board. Hey, how about the Libyans? Whoop, whoop, right? Great. So, I don't know. Russia, I think, is going to be they're not even an OPEC country. I mean, the scariest scenario is OPEC can't get it done. The Russians give up on OPEC, and they say, all right, oil's going to be lower for longer. We're going to need more oil because we can't get oil prices to go up. So for us to pay our bills, we just need more oil, and they roll into Azerbaijan. That ain't good. So whatever. Just don't be shocked if we get a pop and a drop, or a pop and something. And of course, if nothing comes of this meeting, that would be very disappointing. Do you remember the meeting where they got together to talk about the cuts and they couldn't even get Iran in the room? No, it'd be a pop and drop, not a drop and pop. Yeah. Yeah, I remember I was in Shenzhen, the top of the Ritz-Carlton, in my bathtub with the view of the park below, sitting in the bathtub, watching the OPEC meeting on TV. I'm like, this is great. I'm trading Asia in Asia. It's fantastic. Because they're talking about the news coming up, which is great because usually it's, I'm in a world where we're talking about, oh, what already happened in Asia, what already happened in Europe, right? And all of a sudden I'm in Asia, trading Asia, talking OPEC in the bathtub, which is really weird for me because I watch Bloomberg in the shower. So there I am in China watching Bloomberg in the bath. It was like weird. It's like crazy. By the way, my bed in that room was 2 king-sized beds put together. One bed. It was like 10 feet wide by, I don't know, 7 feet long. Yeah. Wonder why you need such a big bed. How could you put Oh, yes. All right. So oil maybe going up, but getting closer to the end, right? This is the end, my only friend, the end. I'll never look into those eyes again. Charles. Careful now, Charles. Can you picture will be? Yeah, all right. So look at this pivot cluster holding this sucker down. So somebody's going to win this battle, and it's either the bulls buying off the 21 or the bears selling off of here. Now look how quick we wick. That means there's orders there, but we filled the orders here. We filled more orders here. We filled more orders here. We filled more orders here. Did we run out of buy orders? Could be a rabbit, could be. Like, right, all these buy orders got purchased, but we still didn't get above here. There seems to be more air under this, right? So. Desperately in need. Are you thinking ahead? Try to. Now, what's the next big thing? Well, look, we have oil inventories at 10:30. What's at 10 o'clock? Desperately in need of some stranger's hand. Yeah, back to Canada. Who asked about the drop and pop? Maybe there will be a drop and pop. A drop pop. Oil, I think, possibly has a little more up, especially because we're going to get a drawdown. Now, why would I say we're going to get a drawdown in oil inventories? World economy has been doing better. Right? That's subjective. No, you're probably right. You're right. Right. That's the trend. We've had now like 4 weeks in a row with inventories falling. No, oil rigs are going up. That would say higher inventory. It's just been the trend. Summer driving season, yeah. See, it starts with summer driving season, that's June, but all of that's just speculative. If you said, look, the 4-week trend in oil inventories is down, right? That's not subjective, right? You see how everything else is like, wow, the world economy is getting better. Oh, well, how about this summer driving season? When? When does that start? Right? And all that kind of stuff. Yes, May, the end of May, I don't know, coming up soon, there's a holiday. You know, I'm an entrepreneur. I hate all holidays. I get so depressed on holidays. And weekends. Weekends are for losers. But, you know, it kind of starts then. And so we get demand for gasoline, right? And then in the winter, we get demand for heating oil. And the demand comes from refiners. Weekends are nice for planning. Yeah, but I don't need 9 hours to plan. Right? Sometimes I feel like a sniper where you're laying on your belly for 3 days straight and then it's over. Like, I wish I only laid here 2 days or even 1 day, or wish I just showed up like 50 minutes, half hour ago would have been great. Right? I heard the, you know, combat military is like that, where it's 3 weeks of absolute boredom and then 1 hour of insane adrenaline. And then 3 weeks of nothing. You're wearing a ghillie suit. Yeah, David Pegler used to tell stories about laying around in his ghillie suit. All right, so anyway, so the trend is down for inventories. So if we had 4 weeks in a row, which I just gone from the top of my mind, I think it's 4 weeks in a row. So is it reasonable to say maybe there'll be a 5th week? Why don't I just use my thumb? A 5th week? Brian, you make a nice poached egg? That's cool. Yeah. Yeah, well, why would the trend suddenly change? Well, it's inventories. It just can't. Right? We're not talking about big long-term economic data. They either refineries bought oil or they didn't. Now that could just, what if just refineries bought less oil this week because they had enough last week? Okay, well, see, it could just happen. But let's just say we expect near June the inventory drawdown to start. So it happened in May. Oh, well, we're talking about 50 years worth of data, right? So it started the first week of May instead of the first week of June. What's the rounding What's the rounding error on that, right? Where we're talking out of the entire 12 months, we're within a 4-week window. That seems kind of reasonable, right? So anyways, it may have already started. Demand from refiners is really what we're talking about. Because you don't buy crude oil. What are you going to do with crude oil? So someone needs to refine it and crack it and, and make a product out of it. Now, you guys could do crack spreads if you want to get into that. Right, where you buy one product and sell another, like long heating oil, sell gasoline. That's a crack spread. You could do intramarket, where you, let's say you sell Brent and buy West Texas Intermediate. And now you're trading the spread between the two different markets. But in any case, so let's just say the trend is down. That would be good for oil, and the Canadian dollar would come down one more roll, right? That's reasonable. I mean, it doesn't have to happen, may not happen, okay? But it totally could, right? And that would make the Canadian dollar stronger, great. But that would also get oil to our 53, 54 area, in which we need to be cautious again, which would be down here, wouldn't it? Notice that our target this week is 2 shakes of a lamb's tail away from the monthly support in a support zone. That may be enough. Supported by that? Yeah, I mean, I think it's going to do whatever it's going to do anyways, Ryan. Now, of course, if we get a horrible GDP or a horrible PCE, then all bets are off, right? But that's CAD, you know, CAD and oil and all that. Great. Well, I think we're just going to go up and down, up and down, up and down. Okay. When are you going to adjust, or let's say re-critique your 6-month bias for currencies? Are you having a business planning retreat with yourself? I think Daniel and I are going to have a business planning retreat. So are you going to have it? So for example, what's been going on with the pound over the last 6 months? I guess I should pull up a pound so it's less confusing. Look, we're back to our cash out. So if you cashed out here and took the rest, if you took the last week off, you lost no money. You see that? Where I have the cash out, y'all? If you just cashed out and took the rest of the week off, you're out fishing in Key West, Florida, catching yourself some barracuda, right? You're barbecuing your barracuda on the beach. Somebody comes out and says, "Hey, have you seen the Euro USD?" And you're like, "Yeah, I got out at 111.85. What's it trading at now?" 111.85. See, I'm a genius. Okay. High inflation. Okay, let's go back. High inflation due to exchange rate, right? Household spending aren't good enough for. All right. But see, these lead to things. What creates inflation if household spending and jobs ain't great? Better way, well, another way, right? Because so to define a wage, you look at purchasing power. Relative to purchasing power in the past, you look for parity in purchasing power, otherwise known as PPP, purchasing power parity of time A and time B, and things cost more money now. So therefore, what? Do I want to do pound dollar or pound yen? I'm thinking about neutralizing the dollar. Pound Swissy, maybe? Might want to do that. Okay. Okay. So, pound Swissy. What do you see on this chart? Well, there's something on here you could define as change of trend. So since March, the pound has been gaining against the Swiss franc. But actually since October, okay, we hit our low in October, September, right, the Brexit stuff, up, down, up, down, up, down. Maybe this is a role reversal, maybe, okay, it's your call. You might want to mark this for future reference, okay. Okay. See how easy this is, guys? Look where it reversed. What else is interesting about where it reversed? According to what I teach you in the swing trading program, it's supposed to reverse there. You knew that on the 9th of May. You could casually look at that and say, this is where it will probably reverse. So if you've taken a swing trading course, you look at that, you're like, yeah, definitely can't buy here. I should probably get out. Even though it's way through the pivot points. Yeah, because it's way outside the pivot points. So anyways, you should know that. But now what do you see technically? How many lower lows are allowed to be in an uptrend? Yet. Right? I'd say 9, but I'd have to mean that in German. There's 9 lower lows in an uptrend. Wow, Wayne, that's really confusing. Yeah, none, 0, 9. So, what do you think? What do we got going on with the pig, the great British pig, the great big pig? What do we have going on over the next 6 months? The election in regards to Brexit, right? So, and what is the major reason that we've seen a bit of an uptrend. Oops. Well, the pound just oversold too fast, right? I can't quite zoom it in, so let me give it a click and let's get rid of the lefty. So we have to decide, right, if it's overvalued and if we're going to make another wave down, right? Now the daily chart says not now. This is not a buy, okay? This is a cautionary tale. If you were short, you're supposed to take profit. The buy is when it does this. Not the cross up into the trade zone. Right, so this is, come on. That's not going to let me. All right, so this 5A cross. You see how the 5A cross coincides with the Stokes going back into the trade zone? So we're too early to buy here. But what if there's only one? What if the buy doesn't make a higher high? Okay. So I would do two things around here if I were me. I would prepare to buy off of support, maybe the yellow zone, maybe the monthly support 1, maybe the weekly support 1. You see, what a coincidence that we're finding support at the monthly support 1. Isn't it nice to actually have that? Where you're like, hey, that's support. Imagine when you were trading and you had no idea there was support there. You were watching this red candle, red candle, red candle, red candle. So you sold here. You were making money for a bit. Then you were losing money. Then you were making money. Now you're kind of break even. And now you're... And there's your last week where you made like 9 trades and made no money. Okay? Right. So I think there's something going on here. There may be a buy brewing. Okay? If it falls here, it's going to fall hard. And maybe it's a sellable idea, so to speak. This is something maybe you pitch to clients. The world's gotten complacent with Brexit. First it was oversold, then it worked its way back, and there's a lot of hope baked in. But when the reality sets in, okay, so there's one scenario, and it's your Brexit play. The next scenario is you head up here and it heads down. If it does that, you're range bound. Okay? And if it goes higher, you may actually 1, 2, 3 the sucker. Oh, look at that, I can grab both. Weird. Never done that before. And of course, all of this is in June, right? So it's kind of really hard to say. So we're already next month. But, at what point does Brexit become a play for you, if at all? Okay? Okay. What happens if Theresa May sorry, Teresa. Her name is Teresa. I'm a stickler for such things. I don't know why people call her Teresa. Teresa. So anyways, what do we do here, huh? So this was a trade. I don't know if you traded it, but that was a trade. That could have been the trade you did early in May and been done ever since. What did you do this month? I sold the pound Swissy. Yeah. Right. That's it. That's all you've done all month. I went fishing. Right. People look at you like a loser. What a loser. He worked for one day in the whole month of May. But I sold $1 billion. But whatever, right? Right? I mean, I'm trying to get you to stay in your good trades longer. There are fine examples out there. Okay, so anyways, is it time to bring this back around? And if so, if it does rally, where does it collapse if it does collapse? And these things might have meaning. So 4 hour says it'll try to head up and then it'll try to head down. Maybe even we head down here first, guys. Maybe we end up buying this today or tomorrow down here at the WS2M1. And then we buy some pig and see if it can fly. And if it can't fly, then maybe we'll slaughter it later, but not right away, right? But you see what I mean? Like, all these things are important. Right? Down here it could be very interesting, don't you think? But I think in that scenario, we're going to need a risk-on environment. So we have FOMC meeting minutes later today at 2 p.m. This is important because we want them to confirm June hike and maybe give us something more, some icing on the cake. And the icing on the cake, besides the rate hike, which we just need them to confirm, I don't think they're going to confirm anything for like September. So September is going to be very difficult. And that'll probably be the catalyst for our yen trades, right? But nonetheless, June they'll most likely confirm. But the icing on the cake is that they say good things about the global economy and the U.S. economy. Okay. That would be risk on. Pound Swissy up is a risk on trade. Whether it happens at MS1 or MM1, I don't actually care. But boy, MM1, WS2 is perfect, right? I mean, this is ridiculous, right? Suppose. Don't you hate it when it's like 8 o'clock in the morning and you're exhausted? we're still a week away from peso. So are you going to do the peso or what next week? Okay, May 1st. So this is going to be the high for the month. This is the low for the month. So we're looking at a range from monthly R1 monthly M2. Wouldn't it be neat if it came down to MS1 for an MR1, MS1? When and why? No, see, I want it to rise so I can sell it. And if it falls, I can't sell it. But the low is supposed to be here, and that looks quite believable, doesn't it? So I guess in the next week, we got to work our way down, then work our way up, which means it's going to close low, which means next month's central pivot's going to be here. Let's do it there, okay? This is next, that's June central, okay? So maybe we do something like that, and then of course we got to work our way down. Okay, any questions about what I just walked myself through? And of course, this is not pound kiwi. I got to change this. Sorry, guys. I'm just so busy. Everybody good? Sí, señor. Muy bien. Breakout. So if you were a buyer here, your target's up here, but that's just hard to believe. Guess we should get rid of that. That's not helpful anymore. We need to mark the higher high though. So we're on the 1 hour, we're at a 200 EMA, which is a neutral zone. On the higher time frame, we're still at a neutral zone. You know, what do you do here? Sell it, buy it? Actually, it doesn't tell me anything. It doesn't tell me anything. Now you might say, Wayne, this is a 3-wave correction, and so you're going to Elliott wave this. 1, 2, 3, 1, 2, 3, 4, right? So I think an Elliott waver is thinking something like that. And then a real flat move here. And then a little trickle. Any Elliott wavers here? sort of a 1, 2, 3, 4, 5 scenario, 3-wave correction after the expansion. Oh, Nick, you wanted to do your zigzag? All right, let's do insert indicators, custom, I think it's on here, zigzag. Let's make the sucker blue. Medium blue. Sounds good to me. Let's make it a fatty. No? So they got that going up. Yeah. Yeah, see, it depends on if you're playing this as a high or not. Seems to me it's a lower high, huh? Now the oscillator says up from here on the daily. So yeah, if you're looking at the oscillator on the daily, it says up now, which means it needs to maybe double bottom first. That has nothing to do with the Elliott wave stuff we talked about on this time frame. Was it this time frame? I think it was that time frame, right? So you can adjust the sensitivity. So that gets my 1, 2, 3, but it doesn't get me the correction. There we go. That's what I was looking at. Okay. 1, 2, 3, 1, 2, 3. So then 4, 4 and then 5 on its way, maybe? Well, like I said, that's Elliott wave. I'm not an Elliott wave tactician, so I'm looking at it more like neutral zone. And daily says up. So on the 4-hour, it says, right? This says down, this says up. Okay? So for this to work, what it tells me is down to a double bottom. When this is oversold, then it will be congruent with the daily chart, so we'll be down here for a double bottom, and then the 4-hour and 1 hour will rise off the common denominator, or congruent, off the congruency of time frames. Think, think, think. Get the honey from the honey pot. Yeah. Translation, short-term short to long-term long. If you look left on the daily, May 16th high is the weekly pivot. Let's go back. This is a daily. But so again, we could say high, low, and close is going to be low. So monthly central comes down, which leaves more down than up, but maybe we open at the M2 or central and head up. So I don't know. Right. Yeah, all I know is I'm going to take the entire, well, the middle of June to the middle of July off from trading. So that's right before the June Fed meeting, when anything goes, and then everyone goes on vacation. Anything goes, and then everyone goes. Does anybody like this zigzag indicator? You know, how to use it? Well, generally it helps people see tops and bottoms, right? So we can agree, for example, in this middle area, there's a good range, breakout, pullback, roll reversal, right? So the way I teach you how to trade breakouts is exactly like this, right? Let it break, catch the pullback, drop it like it's hot. Also notice these key bounces at like pivots and stuff. Right? So you could say, oh, that's important. Oh, that's important. Oh, that's important, right? Look how it reversed at the monthly R2 and then bounced at the monthly central. I mean, I don't know. Are professional traders of the USD yen using monthly pivot points? Right? So if you believe they do, because there's no way to prove it, right? If you believe they do, then you can open up your charts, let's say on June 1st, look at the monthly pivots and say, I know what institutional traders are going to do. I know where they're going to buy, I know where they're going to sell. Because you know they're using monthly pivot points. Like, that's it, right? Like, oh my God, you can't make money? You know what they're going to do before they do it, and you can't make money. Well, maybe you're screwing it up, right? Maybe you got to change your behavior. I'm starting to get my Superman thing. Yeah. All right. So I think I'm done. I don't know. I'm looking around. Like, what else is there? You know, we got the news at 10. We got the news at 10:30. We got the news at 2. News. Trade the cat today. Trade the oil today. Watch the dollar, yo. Oh, you want to do some gold? All right, I'll do some gold for you. We're stuck in our range. Like I said, all I predicted was 12.17 would be the low for May. I didn't say it had to go up. But we do have a technical pattern here of consolidation. So you buy at the bottom and hope it breaks out to the top, or you sell it at the top and hope it breaks out at the bottom. Okay? The 4 hours is up off the weekly central. The 55, however, predicts a double top, triple top, right? Which we identified a week and a half ago as a 618 reverse fib. That's why there's so many black lines, right? It's a fib of a fib. So it's simply where we talked about way down in here after the bounce of 1217, we simply said, oh, 1263 is where a bear would sell. It's not a pivot, it's a fib. And now we're in what's called fib wars. Bulls are buying it at bullish support, bears are selling it at bearish resistance, and amateurs are losing money left over right, hand over fist. Cool, huh? Nick, it's not that I use it the most or a lot. It's when you and I get together once a day for 1 hour, I have to have a fine balance between long-term stuff that never changes and short-term stuff that's about to happen. Right? But I'll tell you what, I'll start on a daily chart like pound Swissy and say, oh, it should go up. Okay, it should go up for the long term. Long term meaning 2 or 3 weeks. Okay, pound Swissy Valley. Then I look at the 4 hour and say, well, today it should be down. In fact, it should be down for 12 to 16 hours. So somewhere either Asia, but most likely London open tomorrow. Even though the pound's been down for a day, I'll probably buy it. Then I'll hold it for 2 or 3 weeks, and then I'll sell it. So it's this idea of short-term short, long-term long, right? Now, along the way, throughout that 16-hour, 4-hour Stokes cycle down, I'll probably use a 15-minute, 5-minute, 1-minute all in conjunction for trading cycles. So on a 15-minute cycle down, I'm using the 5 and the 1 to hardcore scalp short until the 15-minute Stokes cycles low into a support zone in which I'll either stop selling or I'll consider to cycle back up on a 5 and 1 scalping back up. But yeah, but that's just time for, but I'll be honest with you, I'm not doing that nearly as much as I used to, or even hardly at all now, actually. Right? So I have other things, bigger things that I'm setting up as well. So I'm not doing 12 hours a day in front of my charts now. I got some other big things going on in our little world of finance and money and gold and all that kind of stuff. So I'm spending a lot of time on the phone, right? Where I used to spend 12 hours a day on the charts, now I'm spending 12 hours a day on the phone. But the thing is, when it comes to global macroeconomics, currencies, central banking policy, commodities, it's all done on our analysis, right? You know what I mean? So you can't do the phone stuff unless you have this stuff. But buying and selling over a phone and buying and selling over a chart or, and all that kind of stuff, you need the analysis behind it, right? You got to be wicked smart. And that's what we spend our time on. And the wicked smart stuff you're going to get from like monthly pivots, weekly pivots, 4-hour charts, daily charts, 1-hour charts. That's where the analysis is done. So my book is Strategic and Tactical Forex Trading. So the strategy comes from macroeconomics. The strategy comes from daily 4-hour charts. That's strategy. Are you going to be a bull or a bear? My strategy on the pound Swissy is I'll be a bear today and a bull next week. Okay, that's strategy. Then the tactic side is when you drop into a 15-minute, 5-minute, 1 minute. I used to use a 2-minute, I used to use a 3-minute, whatever you want. But as far as pulling the trigger, the general doesn't pull the trigger. The general's looking over a map, right? They look over, right, horizontal, right? Vertical and horizontal axes, right? We look at the time price continuum, and the general, the field marshal, is staring at the map, moving pieces around and say, well, we think they're there, so we'll have this, and then when they come in after us, then we'll come back around, and then we'll this, and you're creating all these strategies. But it's the platoon officers, right, and the non-coms that are kicking down doors, tip of the spear stuff, right, pulling triggers. And so that's what you use the 15-minute, the 5-minute, 1 minute for. Okay? So simple. Yeah, but it's interesting. It's all strategy. The tactics, I think could be personal. You can use Stokes, you can use MACD, you can use moving averages, you can use price action. But look, if you don't know what the heck, if your strategy is crap, kick-ass tactics are not going to save you. Because your stupid strategy is going to get your non-coms and your field officers, right, your platoon leaders, killed. Then what? Now you have no leadership. Now you have a bunch of idiots running around with guns. Those guys get slaughtered, right? So it comes down to, it's all strategy first. Tactics, I don't even care what you do. I can teach you what I do. I can teach you what, I don't know if I can teach you what other people do. But like scalping and spot trading, dude, you could be slow as molasses if you trade with the right strategy. And I don't mean how you trade. I mean, just, are you a bull or a bear, and are you at support or resistance? So like, if you're a bear and price is at resistance, I don't care what tactic you use to sell, just sell it, for crying out loud, right? Like, dude, do something, right? Oh, I like to use ADX combined with an RSI. Dude, if that makes you sell it at resistance in a downtrend, then by all means, right? But what makes you money is the fact that you're selling at resistance in a downtrend. Everything else is sort of whatever, right? Yeah, well, Nick says it sounds simple, but it's not really that easy. Of course it's not, right? And I don't want to make it sound that way, but if you've made a decision based on solid analysis, the tactical part should be fairly easy, because again, you're only selling at resistance and in cycles and crossovers and stuff. And when you're wrong, you know it for a fact. Like if you're selling and it just made a higher high, holy smokes, you've missed something, bro. Stop trading. And what often people do is they start staring at the 1 minute and 5 minute, and they stop looking at a 15-minute, and they don't realize the cycle's over on the 15. So it's going to head up for 2 hours, except you're still selling. Well, Nick, in that scenario where your chart says one thing, your fundamentals say another thing, that could be a sign of plausibly over trading. So if you were a longer term trader, you might go 3 weeks without a trade. So like, how about the ultimate long-term trader? What did I tell you to do with the yen pairs starting basically January 1st. Sell the yen pairs. Cool. I had a plan based on macroeconomics. And that should last around April 1st based on repatriation. Right? Is that what you understood? So around May, well, really the middle of April, you should be like long yen pairs. Until about June. Then the yen pair should come back down. And then around September, we should be buying yen pairs again. What if that's all you did? Yes, Nick. Forward thinking combined with patience. Yes. But to make the big money, you have to know the big trends. But also, like with the big fun, crazy, aggressive hedge funds, the guys that make 1,000% a year kind of stuff. What they do is they wait for evidence that the trend has begun. They don't guess, and then they kill it. They crush it. They destroy it. They risk everything. So all of a sudden, like you guys have seen me over the years, right? Where like nothing's happening, but we're expecting something to happen. And then all of a sudden, I'm in 45 trades. Right? And your intention is to hold every single one of them. And then in a day or so, they're up 100 pips, 45 more. Just blah, blah, move all the stops. So it either comes down, knocks you out of all 90 trades at break even, and you're like, oh, well, I had an op. I guess I was just too aggressive, right? Or you're going to make 10,000 pips. And when in some scenarios, depending on who you are, break even's okay if you had the opportunity and took the opportunity to hit a massive home run. Right? Because you can always go back to your clients and say, yeah, well, it was the market, it was really choppy, this, that, and it all came back down. Well, it was tough, we made a couple of percent, but nothing major. So we basically performed that market. And the client says, oh, yeah, I guess I understand that. That's really too bad. I was hoping for more. But, they're not devastated. Or the other scenario is you come back, you're like, yeah, I made 400% in the last 3 months. And the guy's like, whoa! You're like, yeah, I'm a big, hairy American winning machine. I wake up and I piss excellence. That's a quote. That's not me. That's a quote. Talladega Nights. So, and for some managers and some disclosure documents and stuff, that's what they're going for. When they know they're right at the beginning of analysis, right? So they say, all right, they say to themselves around August, the yens are going to get weak. So they wait. August, second week of August, nothing. Third week of August, nothing. Fourth week, all right, starting to form a bottom, right? A J low, a big wide bottom. And then maybe the first or second week after non-farm payrolls, the yens start to take off. Bye, 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 bye. And then there's a big week, and then it comes back down in retracement the following week. And they're just like crushing it, right? 40, 50% of available margin spread across all the yen pairs, jamming stops. Just jam the stops. And if it takes off, now they're like, oh my God, we just loaded the boat at the bottom. right? And since we're mark to market, we're collecting the profits as we go. We know this is going to go all the way to Thanksgiving. And they're just going to like aggressively do that. And then what happens after Thanksgiving? Dump it all, right? Bottles and models, New Year's Eve. And that's what they do. And then the next assumption is the yen pairs are all going to come back on profit taking, which you've already taken your profit. So all of a sudden you just do the same thing and you just crush it on the way down. Yeah. So I gotta go. Look at me, dude. It's like 8:30, 8:45 in the morning. I look like I'm so exhausted. Right? Look at this. I'm terrible. Like I'm like sunburned or something. Just hot. I'm tired. All right, kids. See you tomorrow. Thank you for being on my team. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. I really do appreciate it. And I hope you, honestly, I hope you opened up a trading account at Trader's Way. I just can't imagine what kind of person you are if you haven't. I mean, wow, you come here every day and you haven't? Dude, I'd be pretty sad. So anyways, take care, guys.